Welcome to another episode of Markets Dawn Europe, an audio podcast on financial markets for European-based professionals. A minimalistic solution to the information overload in mainstream and social media. This is what you need to know today.
Morning. Wall Street sold off on Friday, driven by a shift in investors' interest rate outlook, following Jerome Powell's cautious remarks regarding the future pace of rate cuts. The Fed chair cited ongoing economic growth, robust labor conditions, and above-target inflation as reasons to be careful with policy decisions. Economic data released on Friday showed strong retail sales and rising prices for imported goods, leading to a sharp drop in the probability of a Fed interest rate cut, implied by futures markets, to 60%. Benchmark stock indices declined between 1 and 2.5% on Friday, to end the week lower by 2 to 4%, with the healthcare sector being the biggest loser, following Trump's decision to nominate Rob Kennedy as health secretary. Some sharp moves in pharma large caps last week include AbbVie's 17%, Bayer's 16%, Amgen's 13%, and Eli Lilly's 10% declines. European indices fell on Friday, to end the week a touch lower, but outperformed US indicators, with basic resources and healthcare names as the main losers. The dollar appreciated for a seventh straight week, with sterling depreciating 2% to 126.17, its steepest weekly drop since February last year. Bitcoin rallied 20% and gold lost 5% week to date. Benchmark bond yields were little changed. In geopolitics, the Biden administration allowed Ukraine to use American-made long-range missiles to strike inside Russian territory, for the first time, leading to an escalation of the war. Moscow responded with a massive air attack on Ukraine's power infrastructure, causing a widespread blackout today. The battleground has moved to the city of Kursk in southern Russia, where North Korean troops are fighting to regain control from Ukrainian forces. Asian markets are trading mixed at the start of this week, with equities in China and Korea gaining more than 1%, while Japanese stocks are a touch weaker. Nasdaq futures are pointing to a partial recovery from Friday's losses, and European futures are firmer in early morning trading. In ECB updates, Italian central bank official, Piero Cipollone, called for more easing measures to support the recovery of the Eurozone's economy, and to prepare the continent to face new trade tariffs. Traders fully expect the ECB to cut rates again on December 12. In IPO updates, Spanish clean energy and water company, Cox ABG Group, raised €175 million after reducing its target size and was priced at €10.23. Shares fell 7% on Friday to a market value of €740 million. In debt capital markets, French lottery company, La Française de Jeu, placed Euro senior bonds in 6, 9 and 12-year maturities. In credit ratings, JP Morgan was upgraded one notch by S&P to single A, stable outlook. Argentina's foreign rating was upgraded to triple C by Fitch. The outlooks for Ireland and South Africa were upgraded to positive, while Latvia's was downgraded to stable. Today will be light on the data front, with the trade balance in the Eurozone, and house prices in Britain. Xiaomi Corp is the only global large cap reporting today. The G20 Brazil Summit in Rio, with a focus on social inclusion, global reform, and sustainability, and the Frankfurt Euro Finance Conference, begin today. It's a holiday in Mexico and Argentina. Thanks for your time, see you tomorrow.
Visit laconicbriefs.com to subscribe to our newsletter. including this audio podcast with an extended script if you prefer to read, plus performance tables and charts, all in one place. Delivered straight to your inbox every morning, Monday to Friday.